Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording about a half an hour after the close on Friday, September 20th. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. How we doing, Barry?
Doing pretty good.
On today's show, we're going to talk about the fallout after the FOMC. They had this big event. Everybody was focused on it since early in the summer. The event has come and gone. Now, what are the effects in the markets?
hmm
It's in the charts, right? As we talked about on our midweek show, price is what you pay attention to. The levels is what you pay attention to. So that's what we're going to focus. Now that the big event is gone, what are the charts telling us? No better place to start than with our good friend, the E-mini,
Gonna say,
closing right on the key level we talked
yeah,
about.
right on the 270. And
Yeah,
I was thinking, the FOMC is come and gone, but we're left with the levels and prices, right? It just
that's it.
never goes away.
That's the constant, and that's why you
Mhm.
stick with it.
If you guys caught the last week and the midweek, you're pretty much up to date as to our thinking. If you're new, I would go back and check those because we kind of thread this thing every few days now with the
Mhm.
midweek podcast and also the weekend one. And that'll help you catch up and see how we got here and what our thinking was along the way. Getting back to the E-mini, we talked about the fact that we were up 270 degrees from the low in October of 22
Mhm.
and how that was a sort of important point. And really, we wanted to see price get above and settle above this 57.51 basis the E-mini. And we also are using the cash chart. So we'll jump to that next. And basically, what happened was we got an inside day.
Mhm.
And our rule for inside day is well, not much happened other than we want to watch the next bar, which would be the Monday bar to see what happens, if we take out the high or if we take out the low. And the probabilities are, especially if they're near highs, meaning near potential turning points, is that it's very likely that we go with the direction of the break, if we take out the high or low of the inside bar.
Mhm.
So we're left with that. And what to do for next week? We're going to stay with the numbers. If we hold about 57.51, we have to assume we're going higher and we'll just stick by that and trade it that way. If we pull back for a correction, it would be normal to pull back even all the way to 56.82 level and maybe even a little lower, but 56.82 at these levels, I would say. And sort of retest it and continue higher. And if that can happen, if we can pull back to 56.82 and trade about 57.51, then I think we have more to go.
Mhm.
That's one. The second scenario is we get below 57.51, really can't, we sort of get stuck under this level or one of the other levels that we have on the 30-minute, that's sort of the yellow flag. And then if we really can't hold above 56.82, we could have a false break high in place. And we have to treat it like that at this point because we're basically, last 3 days, the bars were exactly on this 270-degree line. You can see that, right?
Mhm.
Wednesday, near the high, we cut through it. Thursday, midway through, and today we, towards the lower end. So we can't leave that level alone. We still have to go, scenario is pretty much the same. What do you think, Ben?
And if you look at June of 2023, it did the same thing, right? As we got to the 90, right? 3, 4 days,
Here.
right there. Yeah, right there.
Mm-hmm, mm-hmm.
As it
Yeah.
was
And we
making
had
it.
the 72 before that. I remember we were messing around with that.
Hmm.
Jumped over the 90. Yep. Same thing.
In 3 or 4 days, we went back and forth there until it picked the
And here's
direction.
another good example when we got to the 180 from that
Hmm.
same low. We were up one day, then down a day later, back up, and down a day later,
Hmm.
and a Monday, Tuesday low, and then we broke out. And this is what we talk about when we talk about break above, hold about, how we broke above and held above, and a retest after that. We just moved fairly smoothly.
Hmm.
So hold above doesn't have to be that high. It could be like we did here. We
Sure.
we broke through, came above, held above right above the line, very close to the line. And once we move away, right up to the 50%. So it's one of those times. And as you know, as you can see, it's not all the time. This is just the third time coming up to one of the main square lines since 22. So that's why it's kind of a big deal.
Yeah, third time in 2 years.
Third time. And we have a lot of timing points. So that's the basic idea we're running with. Now to get down to levels and look at the cash chart. And I think we looked at this midweek. Mainly we're using this because it helped us really get the high back in July. Because that was a 90 by 90. If you guys use that, see that, if you guys can see that, that's a full square calendar day chart. And we did an ABCD correction back up here. Again, we went up and we turned down. And on the way up here, we were looking to see if the market was going to do, since this was 90 up and we hadn't gotten a chance to take it out. We were waiting to see if the price action here is going to be a lower high, lower than the high that we had in July, or if we were going to go up and do a false break and then sell off, or we're going to settle above. If we do, we have plenty of targets up above. Again, the cash has actually cleared the 90, where the continuation chart is right on the line. It's very close. But nonetheless, we're above this 56.73, which was sort of the key level we were watching. We didn't settle above 57.12. Right in the zone. The reason I colored this zone is it's important that we can have a lot of sort of false moves, a little bit above, a little bit below, right at that 90. And we just want to watch it very closely. So we didn't, we want to call it the zone between 73 and 12. We didn't quite clear it to the upside. We didn't do it yesterday, didn't do it today, but we are, to be fair, we're squarely above the 90-degree line, and let's say it's 56.73. If we can hold above, so basis the cash, if we can hold above 56.73, we can expect the markets to move higher. This little block was from the Gartley target box that we set up here. Last week or the midweek, I think. And if we use that, and let's just do the ABCD part of it, not the entire ratio set. If we do that, you can see where the ABCD hits. It's definitely within the box, but it gets up into about 59.37, 59.40, 59.35, right in that area. So it's not like we don't have room to run. If the Gartley's, if that's what's working, we also have a 50% of the next square, which is at 60.50, that's 60.40. So we do have plenty, but we want to make sure we clear this level because, it's an important level. And this is just from the April low. And you saw how it's important from that October low in 22. So there are a number of cycles that end up here in price as well as time. And that's why we're watching it very closely to see which way it's going to settle. So far, it looks like, now, we did have a high bar on Thursday, and today we had a lower low and a lower high, right, Ben? So
yeah,
to be noticed. And the futures ended up with the inside bar. So if we take out today's low on the cash SPX, we'll have 2 days down if we go down next time, right? Next trading day. And then we have to see if we're actually selling off from that and we get stuck below 56.73, or if it's just a little, sort of a minor pullback. I mean, any pullback even down to 56.50 structurally fully intact. I mean, anywhere in here. So the idea is if the bull market is continuing and even a pullback down into 56.25, 56.50 would be a normal pullback, just like we pulled back, in here or here. I mean, these are all sort of normal pullbacks. So that's kind of the thing we have to figure out as early as possible. Are we going to continue on to these higher levels, or are we finished here and we're kind of doing a song and dance just to get everybody on the wrong foot. That's my take on the cash.
Yep.
Anything what do you think?
No, I think that's good.
Yeah.
I mean, those levels are important, especially that 90. If we get stuck below it, then the odds flip.
Yeah. At these levels, this is what you have to go with because after all the news and everything is said and done, where price is left here on the chart, and we have to go with that. Now, this is interesting. We looked at this a few weeks. Actually, we've looked at it every week, I think. The deal here was a circle, how we've, the ideally, when you have these circles, the third point or the fourth point, you can draw the circle with 2 points, but if you get the third point or 3 points, and if you get the third or fourth point to hit it and not break out of it, it's possible that it ended that leg, and we contained the move within the sort of the dome here. Now, in this case, I mean, this is as if it wasn't easy enough, already, right?
Right.
It's just I think it's cool to look at this because it just gives you sort of how the market, what the market shows you in different aspects, from different aspects, different angles, right? So here, not only do we have the circle thing going on, and let me show you what's happening with the squares. We're up 504 on a square of 72. That's 3, 4, 5, 6, 7 squares out, right? And I think we talked about that. That's why we dropped this line here. See this date here, 9/18.
Yep.
Looked at it once, and we're definitely 7/8 up. So if I move the square out of the way, so we have that time count coming off that low, and we really didn't clear the circle. But what we did do is when we made these equilibrium lines are actually pretty effective once they get traction. So here, the cool thing is this line here, the lower line was already in place when C was done and price was getting through B. So on this date, these lines were already in place, and you can see how the low was caught by the outer line, and the drive up was caught by the line, the inner line on the upside in the above the main XB line, and then the pullback was caught by the lower line, and now we ran up, and now we stopped pretty much on the same line. See that, Ben?
Yeah.
So geometry wise, this is pretty cool. Just because it stops there doesn't mean it can't go higher. Obviously, we can press against it just like we did here. On the first day, we pressed 1, 2, 3, 4, 5, 6 days. We pressed against it, constantly making higher high. So that can happen here. But I think it's interesting that, it's worked a few times, and until it loses traction, it's still working. So let's see what happens here. It sets up, it sort of gives a little bit of credence towards the idea of a false break, and we might turn down from here, especially because of all the time cycles that we had expiring pretty much in the same time zone. So I just wanted to point that out. Let's get on with the Dow. I mean, the ideal target to the upside would have been around 43,100.
Right.
44, 300. I mean, that bracket, it's because we had a number of cycles ending up here, price cycles ending up here. But at a minimum, this 43,100 area would have been good. That would have been a solid target to stop at. For now, we're sort of right under it. So the Dow, I'm not so sure what it's doing. It's kind of in the middle, kind of pointing towards, the Dow could go a little higher. So we'll see. I'm watching it. We don't key off of the Dow too much. It's just good to have there for reference when everything else is kind of looking crazy. But here you can see how well the 180-degree held. We held the highs here. 1, 2, broke through, came back to check. Quarter line held here, came back and rechecked it. So the 1/8 line was, we had a number of hits along that line before we took off. So the line, the lines are solid. You can see the 50% line, how we held that a couple of times before we moved higher. So I'm thinking, getting up there wouldn't be so bad.
Right.
So it's possible.
That 180 is a pretty strong level, pretty key right now.
Yeah, 180 is a very strong level, and if we're going to do it, let's just do it. And now I just wanted to show you guys what happens when we put the 72-degree square. Now there we have a smack 216. That's 3 squares up, or if we're using a square 144, it's a square and a half up. We have a price cycle expiring. Now, was this level also good? Not bad. Look at
Not
this.
bad. Yeah, not bad at
Of
all.
course, the 180 is held by both. So that
And
line,
then the half square did really well.
that becomes a half square.
Mhm.
And this half square here, the 108 degrees, ended up becoming a good level. The only thing is it was a little bit dirty down here while it was getting its traction after between 22, 23. So again, is this super easy said and done? No, because if you put the square 72, which has worked really well, you can see there's resistance. If we put the 90 back on there, you can see 90 is pointing to that it can go a little higher.
Go a little higher, right?
So what do Gann students do when you run into this, which is often? Well, you work with the one that's holding it. So you can see how 1, 2, 3, 4, 5 days, we kind of built up into it, then we stalled out. And so we work with that. We want to see if it breaks above that or not. I'll leave this here for next week. Going off the 90, sure, we broke above it. And can we still get up into here? Sure, we can, but we want to watch this 216 to see what the price action looks like. And that's around, let's just say 42,550. Let me drop the line in there.
Yeah, that 72 is working really well.
What's that?
That 72, if you look at for all of 2024, it's worked really, really well.
Yes, it's been working. It got traction and it's humming away. And even here, it's not bad. If you
not terrible.
No, you can read it.
Because that's major chop, and it was, trying to define major chop is no easy task.
Yeah, here, yeah. But even then, if you take out the reason we had these 2 blocks in there, because back then we were looking at this, we marked off as choppy area. And I think that's how we got this number, this 34,450. And that was sort of the mean reversion. And you can see how that played out to be sort of a mean reversion point that we broke out.
Yep.
So the level to watch, so we have numbers for everything, breakaway numbers. So 42,550 for the Dow. And we have the cash. You guys know what that looks like. This 5673. And we know what the futures numbers are. It's really 5750, 5751. That's to settle above. And we really need to watch what the pullbacks looks like, because I wouldn't put it past them to just kind of sell off a little bit, then run back up, because we do have a trend line here that we broke out of, even in the DIS contract. So, and the market's in a very strong, position. If you take it by even if you drop a 1-by-1 line. But these levels will help us keep our head clear. If it's above that, great. We get the buy setups, we go along with that. And if it's under that, then we have to be a little careful if we're going to take the short side, because it'll just be getting started. I mean, we're way ahead of it in terms of, which way to trade. At least we know what the levels are, and it's right there, right at the doorstep. It's not like we have to wait. It's not far away. I mean, that's the good news.
Yeah.
All right, let's get to the real active chart, the one we're using all week long, every day. And that's the 30-minute S&P chart. And we post this on X, and along with the charts that Ben posts for the NASDAQ and all of his S&P charts. So these charts we both post every day. There's a post, and sometimes a couple times a day. So if you guys want to watch it closely, like day to day, links are on the description for our Twitter accounts, X accounts. So check that out. And if you guys like our work, give us a like and share and subscribe, and also click the bell for alerts, because that way you'll know as soon as we drop one of these podcasts. Getting back to the 30-minute, did extremely well this week, even with all this crazy going on, right? The Fed is this and that and the other thing. And we basically watched the 56.29 getting taken out. I think we talked about it last week. After that, we had 57.20 be the target, and we got to that on the 17th. And 56.75 was the pullback, sort of the corrective, any kind of a support level for us at that point. And you can see how not only did we stop there, we stopped with false breaks there. Perfect trading opportunities if you guys are using those kind of patterns. And after that, we talked about, I colored this zone and said, if we can, so once we clear this, we should get the direction that we're going in. And you can see after the second false break, well, of course, ran up first on the news, did a false break to this high, sold off, got back into the mix. Then we went all the way down, a false break here between these 2 points, same level, so everything's cool, no panics.
Right, right.
And then here's a higher low, ran up to 57.20, another higher low, ran up, got on top of it and held on top of it right there. Good example of it. Sure, it was in the middle of the night, but still did it.
Yeah.
And 57.40 was the other level. That was a zone it really had to clear. And you can see how it stopped right at 57.40. And then it started to clear it. And we ran up. And the run up went in a 57.67. And 58.14 was the uppermost level, 180 degrees up from the low. And you can see we got very close to it. And we did the false break here. So, anytime we get very close to a key level and then we do a false break without doing the false break above it, it's still suspicious. You want to kind of watch it a little bit. And sure enough, from there on, we sold off, came right back to 57.40 and we bounced. So now we're stuck between 57.40 and 57.67. So the key now, if you're watching at this level of price action, then it's really easy to see which way the markets are turning because we're really watching to see how these levels get taken out or not. So at this point, if 47, if we get into the zone between 720 and 740, that's not exactly great. And if we take out 57.20, then we know we have some kind of a high in place and we're going to trade lower. So we'll know that soon. We don't have to, wait till we get down to 56.29. That would be the earliest, I would say.
Right, right.
Right. On the other hand, same thing. If we hold this low and Sunday overnight and Monday morning, we manage to get above 57.67, I say then we have a shot at testing this 180 level again. And if we can get above that, that'll give us, that's the full picture, right? Full spectrum. Now we know all those daily levels, all of those are lining up. And 30 minutes sort of leading the way, and we can kind of watch the price action closely. So that's how we watch it in the trenches. And all right, that's it for the S&P E-mini. Do you have anything to add, Ben?
No, just that those are the key levels, and we try to make things really complicated, but if you just boil it down to the level and watch it and say, okay, are we above it? It's bullish. Are we below it? Okay, I got to look for bearish setups. We do try and complicate it, but that's just our mind. If we can just focus on the levels, it really helps clear things up. All the noise kind of goes out the window because you're not paying attention to it.
Right. And a lot of you guys have your own systems. Let's say whatever the system is, it could be indicator based, price based. God knows there are hundreds of systems to trade. The way you can easily, the reason we talk about price levels, we can talk about patterns and all kinds of other things, squares, but the reason we boil it down to the price levels is, no matter what system you're using, if you know the levels, you know where your buy and sell signals are getting triggered in your system, and you can adapt these levels to whatever system you're using. It's easy. It's very universal in that sense, right? And it's easier, adaptable.
That's right.
Yeah. All right. Let's move on to the weekly S&P. Take a quick look, and then we'll go on to bonds.
And Barry, that may be a good topic for the end, where it's like, how do you flip the switch mentally? Like we know the level, but it's really, a lot of the trouble traders have, and I had it and still struggle with it, is, when you're looking for something and the odds flip, you have to quickly change, right? You have to change your mindset and change how you're going to attack it. So let's remember that and talk about that at the end.
Yeah, let's talk about that. That's a fresh topic. That's good.
Yeah.
Okay, so the weekly, well, you guys, the reason we've been talking about this for the last few weeks is because we ran up and we expired this 90-week cycle here, and we were basically trading below 56.72. At this level, not much to do other than, you have to wait till it clears to the upside, or you have to wait till it clears below it. Otherwise, these are sort of more like ending points and beginning points until we flip over to the other side. Now, the interesting thing here is we cleared this with flying colors, right? This is a E-mini. Of course, there's a little bit of premium in there because of the rollover. But still, that hasn't bothered the weekly so much in the past. So we'll stay with this. But boy, that's a clean bar above 56.72.
Right.
And now basis the weekly, it doesn't mean it's ready to go. I mean, you're probably wondering like, well, when is it ready to go? Well, it's ready to go now, but it is, markets being what they are. That's why we're watching it from the 30-minute all the way down, all the way up to the monthly, because we kind of want to get a good handle on directions, continuations, and turns. So here we had this 90-week cycle expiring, and sure enough, we got a pretty good turn off of it, pretty good sell off of it, came back up, and a higher low. Now we ran up. So this is potentially, it's got fuel to run, at least as far as the weekly is concerned. Now, the only caveat, always there's one, basis the weekly, this could easily be a false break. Okay. So what you want to watch on the basis of the weekly is you want to watch this week's low. So, 56.69 and 56.69 is a low you want to watch. And our level, of course, is 56.72. So if that gets taken out, and depending on the price action that we're going to see, on the daily chart or any other lower time frame, we're going to have to quickly figure out. And I keep repeating this, but all of this is only because we're at this line. We're up, 135. So we want to know, we really want to be clear, because once we clear, there's plenty of room to run in either direction, right? So this is the 50% point, kind of like here. If you look back in where we were when we were at the 4,200 level, we can see how we sat around this 50% for a long, long time, broke out, came back for a retest, and then we ran up for the full square. Came back for a retest, ran up for the 50%, came back, ran up again here. So this time we had really good time cycles expiring as well as price. So let's watch it for next week, see what happens. If we clear this week's high next week, and we have a higher high and a higher low basis the weekly, okay, that means the levels we talked about on the 30 daily, they're all being taken out, and we already know,
and we're moving
trading higher. Looking at it from the lower time frames.
Right.
So for here, let's watch to see what happens.
My only comment on the weekly is I have some circles that I sent you, and I were talking today, and I sent you a chart showing you that. I'll post it to X, but we are right bumping up against a circle. And so next week is a big decision point. Either we're going to bust through the circle and keep going, or we're going to start following the curve of the circle down. So as Barry said, there's always something, right? And so we just take all these different pieces of evidence. And then, as he said, if you see things moving in a certain direction on the lower time frame, the higher time frame is generally going to follow, or vice versa. And that gives you the confidence to know, okay, we got much more evidence stacked up on the bullish side. We better look for bullish trades.
Exactly. That's exactly right. All right, let's move on to bonds. Let's get back to our normal set. So
looking a little false breaky at the high, isn't it? Isn't it?
It sure looks like it. So we did the 72, got above, and this could be a normal pullback.
Could be a test. Yep.
It could be a test. We talked about 124, 125 before. So really, in this case, really to confirm that we wanted to trade below 124, and then we'll take it from there. But now it looks like this is a sort of a normal pullback. The only reason we're looking for a cycle high, we have 180 count right there, high to high. We have a 135 coming up here from this low. that alone is enough to watch. But on top of that, we have price here. So I think we have to, the bonds might be done here. And we really want to wait till it can really hold above this level 72. This is not really holding above. This is kind of crushing
It's
back.
straddling.
Straddling. Yeah. It's not quite there. And we're using 124 as a little bit of a extra adjustment. We're giving it an extra point to see. And once it settles again, when it's funny how many markets are at key square levels and not.
I was going to say, Barry,
somewhere,
you and I joke about it. Oh, they're closing it right on the level, right on the square, right on the half square. I hope you guys are noticing this because it shows you how critical these levels are. I don't think it's a mistake that we close at these things on weekly basis, or we stall there for 3 or 4 days before going somewhere. It's showing you the importance of the level to the participants in the market.
Yeah, for sure. And I'm just going to put the cross at this high. And if you look to the left, check out this box here. This box, this used to go all the way across, and this box here was it was drawn back in the day I guess we were waiting for the breakout.
Yeah, we were just defining that chop.
So I'd leave all that, in place, even going back. But anyway, if I put this on the high, you can see how it's exactly at the middle. It's in the middle, right? So it's this high, right there. So this is why there's too many kind of strange things happening on the charts. So to really see what's happening, we have to give this one a little bit more time because we have to clear the square. Obviously, we're still above the trend line. So everything looks, it looks like it's okay till it's not. So that's why we're being a little bit more careful, especially with the inside bar on a downturn. So if the low of today gets taken out next week, obviously we're going to test 124 in a hurry. And that's when we have to see, what the next action is going to be like.
Right.
Yeah.
And the weekly is sending a loud message on the bonds too.
Yeah, man. So weekly,
I would say reversal action.
It pretty much got to the target. We had 128.07.
Right.
If you guys watch us every week, you'll see that this has been on the board. And it could be 128.05, 07, but wow, we got close enough. And that's 1, 2, 3/8 of a move, a fairly normal move for bonds. Here we had the same move up, although it was a little bit longer. It was 1, 2, 3, 3/8 again, 3/8, 3/8. So these are like normal moves for the bonds. So that's why we want to watch it.
And the outside reversal too on a weekly basis.
And an outside reversal, good one, yeah. Outside reversal weekly basis. Now we had this ABC drawn up in case we went crazy. So I'll leave that there, but we really want to watch the levels from the chart. And this 128.07 is a strong one. So unless the chance to take it out was already there. Like we could have done it, but we didn't. So my guess is, that's probably the high. And if that's the story, then we know the daily, it's highly probable that was a false break. So that's how we're going to frame it. And we'll watch it next week and see how that goes.
Yeah, that's good analysis on bonds.
You got to watch that closely. And we'll catch bonds and T-bonds, the 10-year on the midweek next week.
Crude, chugging along.
Chugging along. And we came down to full square. We got to support. I thought we might go a little lower and do a false break. I guess we didn't have to. And now really the key, looking at the chart now and the price action, you can see how the 73.50 is playing out. It's really that's where all the overhead is, right above that.
Sure. So
I think it's pretty clear to get to 73.5, and we'll have to see what happens after that. Obviously, if it gets on top of it, 79.50 is the next target. So for now, it looks like the low is in place, and he did get to
the 60
and the full square. And interestingly, we only had, we had an inside bar, and then 1, 2, 3, 4 bars up. Only 1 day correction till we took off again. So
yeah, that's promising. But like you said, the next big test is what do we do at 73.50?
Yeah, there's a lot of resistance up there. So we'll see what happens. All right, let's get to the weekly. This is
an up week.
up week, and this is about the clearest chart we have.
Mm-hmm.
of all charts. It's so clean.
Mm-hmm.
So we have an up week again. The overhead is really around here basis the weekly. It's really around 73.50, 74.
Mm-hmm.
So till we get there, looks like we're okay.
Yep.
Once we get there, we clearly have a battle because we have all of that overhead on top of it. And
Mm-hmm.
what that means is, if we can clear that, lows are definitely in place and we have a lot more to go. So maybe we will start a rally on crude eventually, finally.
Yeah, exactly.
There's a lot more work to be done though,
Mm-hmm.
because this could continue on like we've done here. Can just hop along.
Mm-hmm.
It's the 60 area being support.
We go into the star of the week.
Yep. You know it. You
Yeah.
know it. And I mean, it's getting close to a target up here,
Yeah.
which we were looking at once. That's how 50% is around 2670. So looks like it's a given that we get there. So that's that. And we can see what the correction is once we get there. What else could happen? But that will be a major high, meaning major resistance up here in price,
Mm-hmm.
at least based on the daily. So we'll see what happens after that. So for now, ever since we broke out of the 180, gold is bullish. I mean, it's always been bullish, but we took a little pause here to figure out which way.
Mm-hmm.
And being that it's such a shallow and short pause, this has probably got legs. And just the ABCD here gets us way above that. So
Sure does.
look at that. Let me put that on there. That's going to be tricky because it's on the same bar.
That's a better way to do it. Yeah.
Mm-hmm.
There you go.
It was a little higher than that, right?
Mm-hmm.
It's right in that area.
Sure.
So yeah, gold is okay. Not much to wonder about. Moving on to the weekly again. We talked about this last week. We took out the high of the prior week, took out the square of 90, and the fact that this happened at a 45-week high square means gold
Mm-hmm.
is very strong. And we talked about this at the time, right? When these squares
Right.
come in, and if we really don't turn and correct and we blow through that, man, it's strong.
It is
So,
strong.
so
Yep.
gold just blowing through all of this is totally possible.
Mm-hmm.
And so for now, weekly is super strong. And I mean, really any pullbacks above 25.60 is solid. How's that?
I think that's right.
Mm-hmm. So those are easy charts.
Yeah.
And copper also sort of broke through to the upside. We were watching. We saw the low come in, did a
Little ABCD.
on the way up, yes,
Yeah.
and we did a pullback before that. The C leg
Mm-hmm.
came right on top of the square. This is what we've been about, getting above, holding above. This is the
Mm-hmm.
same song and dance. And I think we had an ABCD coming up in here somewhere, right?
Yep.
And did we meet that?
I think we did, or we're just a hair short.
Well, yeah, there we are.
Mm-hmm.
Good enough.
So that's another good marker, right? Because we always use that. If we can blow through that, it means it's super strong and going to keep going. If not, we say, okay, what kind of correction are we going to get?
Exactly. And any kind of correction holding above, it's like 424, 425. Copper is very strong. And, the weekly, let's go to the weekly. So here, everything's okay. The lows came in. We're looking for it to continue higher. We're looking for this 425, 424 area to hold for support. Let's look at the weekly copper, and you'll see what happened here. We finally broke through that 144 level.
Mm-hmm.
So, I mean, the deal here is here's that 424, 425. You can see, on the daily, I took that out of just the structure. Here we see it's actually the square,
Yep.
144 square up. So anything above that is solid. Copper looks good. Let's see what happens.
Exactly.
Yeah, everything checks out
Mm-hmm.
so far.
Dollar had
Yes.
an interesting week, didn't it?
Dollar had a very interesting week, but a boring couple of weeks altogether.
Yeah.
The key here is, we had support at this 100.5 level. We came down here, we tapped it about 3 times while making lower highs, and we made a lower low. So I'm not all that thrilled, and it looks like we might get par, at 100 or 99.50.
Sure.
to finish this off. And ideally, if we can get down to 99 and finish off this square, especially if we can do it on a square by October 2nd or around there. I mean, that would be ideal, my preferred way. So in the meantime, this is still, yeah, we found some support. It's not showing to be that strong because we are kind of grinding lower. So let's wait to see what dollar wants to do. If it takes out this low from Wednesday, I definitely think we're going to go back and fulfill the square and really put in a decent low. I mean, that would be a good low because we're going to take out this low and create a false break. So we got to stay on top of that.
Mm-hmm.
And doing so would also give us a false break over here. The lows in 23. And if we can do it fast enough and recover, it might still hold the 90. So,
True.
The one thing we want to watch here is to see if this is some kind of a false break or if this is starting a whole new direction. It doesn't feel like it. I think the dollar is going to be very strong soon. And this is just checking out the old breakout level.
The great news is that 90 will tell you.
And exactly. That's exactly right. And we have the 99.50. So everything's lined up. We're just waiting to see what happens. And you can see why we're waiting because the market's also waiting. It's been a whole month bottoming, banging on the same level. So
yep.
Makes sense to wait and see. There's nowhere to go. Market's not going anywhere. So looking at the euro, I put the same square that we're using on the dollar, the 60 coming off the low in 22. We almost did 180 up here. We did 225 by 180 by 225 up into that high with an ABC finishing. And that was a nice correction back into the 50% level back up. So this square has been working pretty well. We held here at the 50% on that correction. So now we're back around this 111 and a half, 1150 level. The question is, are we going to go tap 180, do a false break above this? Pretty much the same expectation we have for the dollar, but in reverse, right? So it looks like it wants to do it. But if you go off of here, this low, which I would say that's the low after the correction. Look.
Whoop. Hitting the ceiling.
Hitting the ceiling. So what's left is just a false break. So we'll have to watch that. Yeah, that's really it. Let's go to the weekly. Well, quick walk back. We remember 108 was the main level for a while. And then we broke above 108, came back for a retest right there. And once that bar took off, it never really looked back. We were up for a few weeks. Pulled back again, a higher low, got about 110. So, hey, it looks like it wants to push a little higher, get to 90, maybe do a false break here like we talked about on the other chart. And let it finish up. And that would make sense for the dollar to go down to that 99.50 level and finish up the business down below. So they're both, looks like they're working it out. We'll leave it at that.
We let them do it.
What else? Well,
Hang Seng
doing good. We came to 50% level and we talked about how that support, we were looking for it to go on back higher, which it did. It made a new high compared to the August high. And it's holding above our level. You can see this 18,054 was our sort of the balance point here. And you can see how the Friday low was right on it. See that right there? Pretty cool. And if the ABC is the target, at least I'm expecting to get to 18,670. If we get past all that, any kind of a correction holding about 18,000, I think we can get to 19,450. It looks pretty clear to me. Here we have nat gas. You might cover it, maybe not.
I will.
Yeah, okay. Well, it's the same thing we've been talking about. It's putting in a kind of a longish bottom, but after this drop here, you can see how we're making higher lows. So everything seems to be intact and trending in the right direction. Well, that's all I got. Let me put it back to you. I know you got a lot to cover today, so
we'll speed through it.
Yeah, but the things that are getting activated are really important, and I think the time is crucial. So,
and the funny thing too, Barry, is this week a lot of the the spreadsheet I keep with the levels for people, most of the commodities changed levels this week. There was that much
Okay.
movement.
Yeah, very good. Let me put it
So,
back to you.
okay.
Well, here's that 50% line we covered on just Tuesday or Wednesday, I remember.
Yeah. And just, we speak about, oh, when they close it on these lines, it tells you, not only does it give you no decision, but it shows you the importance. And here we go again.
And it keeps you guessing.
And it keeps you guessing. That's right. So the big development this week, I'd say, is we broke through this one by one and made a higher high.
Mhm.
Now, the question, which, the cliffhanger we have still is this going to be a false break high, or are we going to be able to hold this half square and then push up towards the full square and the all-time highs here?
Right.
I was measuring out, high to high, 45 was here. So that kind of went by because we pushed through it. So where I think we just have to watch this price, and the price here that's really important, call it 20,000. If we can clear 20,000, it opens up, the all-time highs in the full square here, which is around 20,830. If we get stuck below, you could say here's first leg, this is second leg up, and then we roll over.
Mhm.
So it's a pretty important spot to watch. The only thing notable here on the weekly is, we made a marginal higher high here.
Mhm.
So using the weekly bar technique, if we take out this low from this past week, which is, let's see, the low was 19,529, it's going to be a reversal, a weekly reversal. And
Mhm.
then it'll make this look like a false break. So that's the thing I'm watching here. The real test will be if we can get up to the half square here on the highs, or we get to this full square on the lows. Because
Mhm.
as you can see, we basically have been trapped in this square for a long time.
Right.
Since what, May,
Mhm.
when we came above, stayed on top, rallied up to the half, and now we've been bouncing in here. So is this distribution or accumulation? We're going to find out. Let's take a quick look at the calendar day. Now, this is interesting in that we had an inside bar today, but the whole bar is above this important 288, which is, four, 144 twice.
Mhm.
We also have some timing coming up, uh, the week of September 29th. So that's going to be an interesting time frame. If we get, especially if we get stuck under and it rolls, that could be um, a lot of action in that point as well. The monthly, you can see where we are. We took out the high from last month. So now we have an up bar for the month. And let's see where the month's going to end out. But it sure looks like we're going to end up somewhere above, which would be consistent with the last 3 or 4 months worth of closes. The only fly in the ointment for the bulls is that we're not clearing this 108 level, right? We keep crisscrossing it. That's a sign of indecision. So we got to see, can we get in the next month, can we get a full bar above, or are we going to have another crisscross bar? I'll have to see.
Right.
Anything to add here on NQs?
No, we're good. Good cover.
Okay. Bitcoin. Remember we had this beautiful triangle set up last week?
Yep. Broke the
And
trend
not not
line.
not only did we break the triangle, but look at where this recent bar is, completely on top of the full square.
Right.
And in this case, it's a 180.
Mhm.
So that's bullish. I think this whole long, 6, 7 month consolidation may have come to an end here. And now, as long as we stay above this full square here, we should push to the half, which is around 67,800. And then we capture that, then it's all-time highs.
Right. Right.
And this thing can do it quickly. I mean, this can move a square in a week, no problem.
Mhm.
So this is important, this breakout, holding on top of this, 62, say 6280, 62,080.
Mhm.
As long as we're on top of that, the push is going to be to the upside. So I think the torture for all the Bitcoin holders could be over and it could really start moving again.
Yep.
Anything you want to add here on Bitcoin?
No, we're good. Looks like, it's clearly we broke it to the upside. So looks like there's a little bit more to go.
Yep. All right, let's jump into the grains and we'll start with wheat. So if you go back and watch the previous shows, we got the low came in, we got a push, we got a higher low, got a higher high, and now we're pulling back. This is the low where we want to see a higher low. If we can hold right in here, around 560, 561, that'll be super, super bullish.
Mm-hmm.
But as long as we make a higher low in reverse, again, it's looking for the first push, first pullback, and then the big move coming out of here.
Mm-hmm.
So that's your daily. Let's take a look at the setup on the weekly. So we got an inside bar on the week, 125 high to low. This was interesting, like a 270 low to low, Barry, from here to here. Yeah. So I'm thinking more and more this could be a really, really good low that sort of launches the next move, the next big move up. Because look, if this was sort of a first move, right, on a weekly basis, and then this is your pullback, you have a higher low. If this low holds, you got a higher low, which theoretically we can push to a higher high.
And it almost looks like a 3 drives into that.
Yeah.
Sure, they're not huge drives. Yeah, 1, 2, 3, exactly.
Yeah, yeah, absolutely.
And this is how they start. Very slow, subtle.
Yeah, quiet.
Quiet.
Very few people interested.
Mm-hmm.
Let's take a look at the monthly because there's some more numbers I have for you. So we have an up bar for the month, which is good, right? With about 5 or 6 trading days left, we have an up bar. That's nice. I went back and I was just looking again, trying to, triangulate this low a little bit. We got 90 low to low.
Mm-hmm.
And remember you were talking about and we're trying to sort of imprint it on the people watching these videos, how important these 90s are, especially on the higher time frames, because they don't come around very long.
Yep.
Low to high, 90
months. Look what happened.
Look at that. Mm-hmm. Monster move, right?
Mm-hmm. Yep.
So this 90 is, even though it's not a, low to high 90, it's a low to low 90. That's a cycle.
Mm-hmm.
And again, it gives me more confidence that there are multiple relationships and multiple cycles on different time frames showing that we could have a decent low in here, and the correction, which was 28 months, similar to this one, 28 months, could be over. And now we're, sort of starting the next leg.
And that could be, if it's 30 months, you just had to add 2 more. That'll be 1/3 of the 90. So you have something there.
Yep.
So yeah, looks good.
So wheat looks good. Let's go to the other, let's go to corn. And we'll find some relationships there. Same sort of thing. We triangulated the bottom. If you haven't followed along, go check the last, 2, 3 shows, and you'll see how we started talking about this when the bottom came in and we started seeing, higher highs and higher lows. We're on a pullback now. Love to see it sit on top of the full square at around 395. But as long as it gives me a higher low and a reversal, we're okay. Then the bottom still looks good. Let's check out the weekly. There's that 90 again, Barry. Low to high.
Yeah, those are pretty solid when they come in.
Oh, Lordy, are they good? So, and here we've done 120 down. Nice move up. Now here you can see why we're stalling a little bit. We're battling at this full square. This is a weekly square and structural resistance. So it's okay to battle here, and the downtrend line. A lot of stuff to get through. So if it just backs and fills and marks time, and then we push up and sit above, it just is further evidence that we're starting a new leg, and this low that we're trying to triangulate is pretty good.
Yep.
Let's take a look at the monthly, see what we got here. Whole bunch of stuff here. And what I want to show you is this is interesting because you're going to see it in multiple commodities. A low to low of 225 months Just remember that, okay? Because it shows up in different commodities too. 225 low to low. Here's another 90 for you into the high.
Yep.
We did here, because what I'm thinking is, and I'm seeing this pattern in different commodities. This was your first push. You had your pullback, and then you had a final push into the higher high here. And it's basically 36 months from that higher low. And so if this was the initial push, we've come down into the higher low. If we project out 36 months, the spike high could be in August of 2027. If we do this sort of move. It's worth tracking, worth watching, seeing if other things come in there. But again, the things to notice, the 90, big, and this 225, because you're going to see it in others. There's also a 180 low to low.
That's important.
Yeah. So there's decent relationships there. So even though corn is a laggard and everyone's saying, oh, there's too much corn and all this stuff, things are kind of lining up. Now we just got to see the price action to confirm.
Yeah.
All right, let's check the last one, which is beans. Similar pattern, right? Found a low, little false break here on the half square. Classic, right? That it does that at the low. We pushed up, and now look, again, it ran into resistance at the full square, which we expect. But look at the correction. It's been more sideways than anything. It's not very deep in price. We want to see a higher low on this correction and a reversal. Then it gives us more confidence that that low is there. Let's look at the higher time frames for some other relationships. Look at that 225 again, Barry. Low to low.
Yeah, a lot of good counts.
Yep. Here we did about 130. I went from the lower high, not the false break high here. But again, this, if you look, you can see it's almost sideways for the last 3 weeks as it sort of digests this move up and, sort of figures out what the next move's going to be. Want to see a higher low and a reversal here. Let's look at the monthly. Geez, there's another 90 into the high. 45 in there. I mean, this thing's 22. This thing's really harmonic with that 90.
Yeah.
So the thing I loved about this, and I talked about it before, we made a spike low below the full square. And so far this month, we have a full bar above the square. So this is kind of a false break that's being rejected, provided we can stay on top of that. And it's good structure here too, right? If we can hold on top of that square, it's all this below here's, we're sitting on top of it. So the soybeans and corn are lagging a little bit when you compare it to wheat, but I think they're all showing signs of bottoming. There's relationships, time cycle relationships at the lows. And now we just need, confirmation from price giving us higher lows and higher highs on the bigger time frames. Anything to add on beans?
No, we're good. We're watching it every week. So
let's go to the star of the week for me, my segment.
We
talked about sugar last week. Now you can sort of see this is a perfect example of why we pay attention when we get that first pullback and a reversal. We highlighted it here.
Yeah.
Right. We talked about it at the low, but once it started pulling back and you can see like an ABCD down. Once we got this reversal, we said, you got to pay attention here. And getting involved here is a terrific risk reward ratio, right? Because if we're wrong, you're out at the low here. If you're right, this is kind of what happens.
There you go. Yep.
And it was
very
just
nice. Good trade.
Full steam ahead. Right.
And that looks like it's leaving a big low behind. After that, if it holds above that square, at the 180 level, I think sugar is on the way.
Yeah, and we'll see it. You'll see it on the higher time frames. Right now, we're going to be coming into some resistance on the half square, which is around 23.15. So wouldn't be surprised if we see a little bit of a battle there. But you can see what it did here: 2 days, and then it was gone. So this is a big move. Let's look at the weekly. Hey, Barry, look, there's a 225 again.
Yep.
It's bizarre, right? When I started
Mm-hmm.
finding, because I said, oh, maybe it's just the grains, and then I started seeing it here and in a couple other spots.
Mm-hmm. No, those 90s, 45s, they run hard.
Right. So we got high to low 45,
Mm-hmm.
low to high 90. I mean, this low looks good. And look at the price action out of it, right? This is how you can really tell, right?
Mm-hmm.
So we broke the downtrend line this week. We closed right on the high. The next important thing on a weekly basis is to stay above like 22.15, because that
Mm-hmm.
means we've captured that square and then we're going to push off there. Let's look at the monthly. Again, another big bar, classic false break, right? At the low. We did low to high here, 45. So I said, if we do low to high here, 45, where does it put us? May of 2028 is a potential
Mm-hmm.
end of the bull market. I mean, look, you can see there's a hell of a lot of movement up and down, but you see the trend, right?
Yeah.
And that may be what we could be looking at here. But
Yeah.
this thing loves 45. You can see them all
Mm-hmm.
over the place, 45s and 90s. So
And you
that's
got to
the
get
monthly on
and you got to
sugar.
and you want to catch them when they come up because it's not that often. So
No, no. Anything you want to add on sugar?
no, we're good
All right.
on mission.
All right, let's go to the next soft. This is one we've been watching and waiting for a long time, and it appears to be waking up. This is cotton, right? We're
Mm-hmm.
tracking this thing all the way down, hoping to catch a low, hoping to catch a low. And then it just kind of went to sleep. But when it went to sleep, it did a false break,
Mm-hmm.
little push up, higher low, little ABCD, higher low. And now look at this week,
Yep.
creeping out of here.
Mm-hmm.
Quiet. I don't hear anybody talking about cotton. Just completely quiet, silent, nobody interested. But slowly but surely creeping up. And look at it. Look at it holding this one by one.
Yeah, beautiful.
Yeah. All right, let's look at the weekly. Give you some more evidence to look at. That's a big weekly bar. I mean, we took out basically 6, 7 weeks of price action this week.
Mm-hmm.
High to low was 120. Here was a 45 high to low, and this low to high was 108. So the little bit of a slowdown we could see next week is if this downtrend line, this one by one off this high here in February, March, might slow it down. But if we punch through that, the next stop weekly basis is 81,
Mm-hmm.
which would be the half square. Let's take a quick look at the monthly. So we got some 90s and 45s here. High to high, 90. High to low, 45. This is, you can call it, this was sort of a choppy sideways. So I said, what do we have here, low to high? We got a 90.
Yeah.
The key here is we have a reversal, monthly reversal.
Mm-hmm.
Still 6 days left, but we've got a higher high on the month. Let's see where we end up. This is early. Cotton's early, but if you look at the daily, start watching it because we're getting that push. Anything to add on cotton?
We're good. Stay on
Okay.
track. Yeah.
Yeah. This is the speed round. I got to run through because I don't want to
Yeah.
I don't want to not get to these ones you guys are interested in. Daily basis, we're at the ABCD target. Now, if you've watched these shows for a while, and a finish ABCD could result in a strong move this way. But if we clear it, if we can bust through it, it could really accelerate.
Mm-hmm.
And I think the probabilities right now are leaning with that. But you'll see that from the weekly and the monthly. For now, we got to get through the highs here, right? Because if this stops here or stalls, unless it just goes sideways is okay for a little bit, and then we launch from there. But if it sharply turns down, you don't want to see it get below, say 30, 20, because then that means there's something else going on. We're going to have a little bigger correction. Still
Right.
bullish longer term, but just some short term caution with that ABCD completing. Here's your weekly. We broke the
Mm-hmm.
one by one down.
Yep.
Next key spot here is called 32.
Yeah. Look at that. $32 silver.
Yep. If we can,
Didn't take long, really.
no, if we can get on top and stay on top of 32, then we're going to push to new highs up here around 34 and a quarter.
Mm-hmm.
But you can see we came down, held support, higher low, and now we're pushing. But, we got to get through this overhead. So watch it. Silver likes to do 90s and 45s. We got a little cautious at that high because it was a 90 low to high.
Mm-hmm.
And we did get a reaction off of it and a correction. So it was a good high. Now we're just trying to see if we can push up and set up to make a higher high. And silver likes 90s and 45s. Look at this, low to high, 45.
Mm-hmm.
Not bad.
Not bad at all.
Let's look at the monthly. Low to high, 90.
Mm-hmm.
If we do the same here, I said, okay, let's take this as low as the new launching point. Puts us into mid 2027.
Yep.
For silver. And you can see this correction has really been more sideways than anything.
But it held above the square, perfectly. So it's
Perfectly
super healthy, super good. Took a little while. Wasn't quick.
Yeah. But maybe it's silver's time to catch up with gold. We'll see.
Yeah. Been talking about that.
All right, let's go to the last one. I've got a few minutes.
Mm-hmm.
Our old friend, natural gas. So while it looks boring, what is it doing? It's just making higher lows.
Yeah.
All through here, higher lows. And look at this little pullback this week. You and I were talking about that bar that pulled right back onto the half square, and then we reversed immediately.
Yep.
So the next big area is this full square, and that's 282.
Mm-hmm.
We want to see us get on top and stay on top. So here we got on top, fought, tried again, we couldn't stay on top, and then we came back down. So if the next time, and again, if this is the first push and now here's the second leg, we should have a little more power and hopefully be able to stay on top of that.
Mm-hmm.
Let's look at the weekly. Another week up, closing on the highs.
Not bad.
And this thing likes 90s and 45s too. Look at these. Low to high 90, low to high 45, high to low 90. So there's a lot of evidence that this is a good low. Now we just need to see price start making progress, because really we've been winding up and going sideways, right? Even though we're making higher lows, we want to see it get out of here and give us more confidence that this is a good low.
Time has to burn.
Yeah, exactly. Got to burn the time. Here's your monthly. 45 months, low to high. 45 months, low to low. Both weekly and monthly are in these triangles. And when these triangles break, man, they go.
Yeah.
In this commodity, they really go. So it's looking good. I mean, anything else to add on this one?
No, I think we've been on, all the commodities, man, you've been on it. And this is how lows come in, and they might last for years. So, the earlier you catch it, the better off.
And we've corrected, 18 months, sometimes 2.5 years in these things. So it appears that a big shift has happened because the time counts have come in, and now we're getting the price action to confirm. So
exactly,
it's time to focus on them and make hay while the sun is shining.
And start tracking them, because they were out of favor. Now they look like they're coming off these line squares. So it's time to watch them.
Yep.
And track them. Yep.
And listen, everybody, we really appreciate your supporting the channel this year. You've really helped us grow, and we're grateful for that. So please make sure to remember to like, subscribe, set the alerts so you know when we're dropping videos, because now we're doing 2 a week. And we really, really appreciate it. Rest up. The trading's going to continue to be wild. We got a lot of things that are moving, a lot of important decisions that price has to make to help us gauge the odds. So rest up, study your charts, and be ready. And we'll talk to you next week. Great job, Barry.
Thanks, Ben. Good job. And we'll see you next week.
All right.
Bye-bye.